Welcome to the NWR Aussie Resources Conference. Next up, we have Heavy Minerals Limited. ASX code is HVY. Now, they're focused on their Port Gregory Garnet Project over in Western Australia. They only listed in September of last year, but I can tell you in 1 year, they have done an awful lot of work, boots on the ground, getting shareholder value up there. Joining me today is Adam Schofield. He is the non-exec chairman. Adam, great to see you. This is a fantastic project that you've put together and are really making some strides forward. So I'll leave it up to you to update our audience.
Thank you, Kerry, and thanks for having us. Heavy Minerals Limited, as Kerry said, we listed 12 months ago, and in 12 months we've done some pretty amazing things, and I'll get into that now. Please take note of our disclaimer, which can be read later. So Heavy Minerals Limited, we're an industrial minerals company with projects in West Australia and projects in Mozambique. Our West Australian project is a Garnet project, which is an industrial mineral. And inside of 12 months, we brought up a resource of 135 million tonnes at 4% for 4.9 million tonnes of contained garnet. And we recently completed our scoping study, which was actually announced on Monday. So we've done a lot of work in respect to that. We have a project in Mozambique, which is a more traditional industrial minerals project containing ilmenite, zircon, rutile. And that's a 90 million tonne at 3% project. So it's a more traditional mineral sands project, but significant nonetheless. In both cases, we're in good jurisdictions and close to bigger projects. Our capital structure is tight. We currently have just over 50 million shares in issue, and currently sitting at a market cap of 9 million with an enterprise value of 6.6 million. Cash at hand as of 30 June was 2.4 million, and we have nil debt as it stands. 35 or 33% of the stock is held by retail, with 18 held by directors and 47 held by the remaining top 20. So structure is very tight, and share price is possibly not reflective of the opportunity at hand. Board of directors is myself as chairman. Established the company just over 10 years ago. I've had a lot of experience in the mining space across a number of companies. Greg Jones is our technical director, and Greg is a competent person, very well known in the resource space, and has a very long history in mineral sands. Brings a wealth of experience to the table. And Glenn Simpson is an non-exec director with a wealth of experience from a chartered accounting perspective, but also from a mining company perspective. Our Port Gregory project is really the one to talk about initially. So our Port Gregory project is in West Australia. It's just north of Geraldton and just south of Kalbarri. As it stands today, 135 million tonnes at 4% heavy mineral, of which the bulk is garnet. That gives us a total garnet tonnage of 4.9 million tonnes. And we have approximately 400,000 tonnes of ilmenite. The resource block model to the right that's on screen shows that we're open to, in the eastern side of the project, we're open to the north and to the south. And there's a lot of potential for that resource to increase. It's a high-grade resource. It's large. We're mineralized from surface, and approximately 90% garnet in the heavy mineral fraction. We're right next door to GMA, who are on our western side. GMA is the biggest producer of garnet globally. They account for approximately 30% of world supply. And RDG, which is a soon-to-be producer, are to the north of us with the Lucky Bay project. The expectation is that that'll be producing in approximately December. So we're in a very, very good neighbourhood, and obviously having the biggest producer globally next to us says a lot about our allocation and the potential for the project. We recently completed our scoping study. As I said, that was on Monday, and results are pleasing. We're looking at an NPV of 253 million Australian, and that's at a discount rate of 8%. There's a 4.1 year payback, or sorry, 4.2 year payback on the project, and 33% internal rate of return with a capital cost of 110 million. We believe when we get into pre-feasibility study that we'll be able to reduce our capital costs, and hopefully by the time we get there, we'll have increased our resource, which will have a positive effect on the NPV. As it stands, total life of mine is approximately 16 years, but that will likely extend as the resource potentially extends. So substantial NPV, low capex as a ratio. We're in a good neighbourhood. We're looking at producing about 150,000 tonnes of garnet annually, which we believe we can place quite easily into the market. Now, one of the big things about mineral sands is how simple it is to mine. This is a very simple flow sheet demonstrating the process that we're looking at currently. It'll be a conventional dozer trap mining operation or something similar. We're looking at putting 488 tonnes through the plant on the front end, and very simple with spirals and a mag set plant, and then the product goes to bagging. So not complicated at all, and very, very simple from a flow sheet perspective, very similar to obviously other major mineral sands producers. And yeah, from a capital cost, plenty of opportunity to look for savings and improvements. We've been very conservative in our modelling, in that we've overestimated a lot of capital cost, and things like diesel, we've taken the high end from a pricing perspective. So we believe there's a lot of OPEX and CAPEX costs that can be improved as we get into the feasibility stage. From a mining sequence perspective, we're looking at mining the eastern side of the project initially. That accounts for approximately 12 years of mine life, and then moving to the western side, which was a higher grade portion of the project for the remaining 4 years. As mentioned, we're expecting that we'll be able to increase that resource as we progress. So the garnet space overall has a major shortfall occurring in the next 6 to 8 years, as forecast by TZMI. There's approximately 500,000 tonnes of shortfall predicted by 2030. That starts really kicking in around 2025, and it's anticipated that global events, including wars and various other disasters, could increase that shortfall. The requirement for garnet is really from an industrial perspective, and as infrastructure gets redeveloped, there's an anticipation that there is an opportunity to really see that shortfall in supply and that increase in demand extend. So currently, long-term forecast and pricing is $210 per ton. That's for an unrefined product, and the expectation is, as I say, that pricing should increase as demand increases and supply becomes short. Adjacent to our project at Port Gregory, or not adjacent but to the south, is our Red Hill project. This is a discovery that was made around about March, or at least announced to market. We're looking at a really high grade project as it appears at this point from surface, and from a scale perspective, we believe that this could be similar in nature to Port Gregory itself. So this project is obviously closer to Geraldton, and we believe has a real opportunity to develop a sizable resource. So within the next 6 months, we're intending to drill that project, and are anticipating being able to bring up a resource there. So we're pretty excited about the opportunity there. Aircore drilling is currently planned for fourth quarter. It was originally planned for third quarter, but yeah, we're just with our scoping study, it's likely to be pushed back slightly. Some reasonable intersects from surface there, 6.9% being a standout for 2 meters. These are notable grades, and the fraction of garnet in those heavy minerals samples is exceptional. So we're pretty excited about this as an opportunity. Again, it's in the right neighbourhood, and there is plenty of opportunity for additional resource to be found within the tenure. So we're in the right neighbourhood. We've got a very good address. We've got resource. We have a scoping study, and we believe that we have the opportunity to turn Port Gregory into a mine at some point in the future. Our Indian Blood and Mineral Sands project is in Mozambique. This project is currently under a mining license application, and it's a sizable resource. We're looking at 90 million tonnes at 3% total heavy mineral. We adjoin Rio Tinto and Savannah in their projects, and currently the Rio Tinto resource is approximately 4 billion tonnes at approximately 4% heavy mineral. So it's a real sizable project, and it appears that Rio Tinto is looking to develop this in the near term. And the east coast of Mozambique is well known for mineral sands projects. Currently in country, you have Kenmare operating a very sizable mine, which has approximately 100 years worth of mine life. And they probably account for being the second or third biggest supplier of ilmenite globally. So it's a significant project, and as it stands with the mining license, when it's approved, we'll have 25 years of mining tenure, and there's plenty of opportunity to see our resource expand. In the near term, we're looking at conducting an auger program that's wide space to really delineate an exploration target, and are anticipating doing that within the next quarter. So a lot of opportunity from a traditional mineral sands space. This is just an expansion on that resource, giving a breakdown of the mineralogy. The primary ilmenite makes up approximately 53% of the total, with 49% of the total, with a fair portion of the ilmenite being a chloride grade ilmenite. We have a reasonable zircon content within the resource, and from network announced in the last 3 months, it looks like a very good quality product. So sizable resource, lots of upside potential, and we're anticipating potentially being able to increase that resource by 4 to 5 times in the midterm post our auger program. This is a breakdown in respect to heavy mineral sands demand. Again, major shortfall coming towards 2030. Although that's not highlighted on these graphs, there is a general increase in the resource demand in the ilmenite space. Ilmenite's traditionally used in pigment manufacture and titanium metal manufacture, and again, pigment and paint is obviously linked directly to GDP, and titanium metals, albeit specialized, or obviously linked to military and aerospace applications, and both of which are obviously in high demand with events globally. So there's a real opportunity to fill a void in the market. There are a number of large projects looking to be developed. Many of those have some fairly significant issues in getting developed, but regardless of those projects coming on stream, we anticipate that there's always going to be a home for a good ilmenite and product and a good zircon product. So lots of opportunity there. Yeah, that's the end of the slide.
Well, Nick, sorry, Adam, one of the things that I wanted to find out was, first of all, apologies, I forgot about Mozambique because I got overexcited about Port Gregory. Because what I love about Port Gregory, Adam, is the simplicity of it and the CapEx. And you said during the presentation that you think that you might even be able to, squeeze that a little bit as well. And I think that it was the simplicity of how you can, I mean, it's almost like a quarry operation, isn't it?
Yes, I would say probably more like a civil project in that you're moving sand in bulk, and but it's a lot of civil operations in respect to housing development, for example, use almost exactly the same methods to move material around. So it's an incredibly simple mining method, and from a processing perspective, we're obviously we're putting a pit in, we're mining at the face of the pit, and we're rehabilitating as we progress with the mining. So it's a very environmentally friendly, or as environmentally friendly as you can be, a mining approach to the mining. And yeah, rehabilitation is amazing on the back of these operations, and in most cases you'd never know that there'd been a mine there at all.
Which is very good. Have you had much interest from people that want the product at this stage, or is it a little bit, it doesn't feel like it's early. Are there people interested in the offtake from the project?
Yeah, absolutely. We've had discussions with a number of people pre-listing all the way through to very recently in respect to offtake. There's certainly demand for products in the market, and we've been talking to a number of different people, but as we head into feasibility, some of those negotiations will be locked down. But there's certainly interest in any product we can deliver.
A scoping study has just come out, and it kind of puts the value of the company into the spotlight. It's trading at quite a low market cap. Now, listen, I know the market's been smashed today across the board, get that. But do you think the market's missing something?
Yeah, industrial minerals is a tricky space to be in, and it's hard enough for traditional ilmenite zircon producers to get people really excited and fired up about the industry. And I think that's really just an education piece, in that if people understood how interesting the space is, and just how fundamentally important it is from a global perspective, I think you'd see a lot more interest in the traditional mineral space or industrial mineral space. But obviously, we're even more niche in that we're in the garnet space. But we're really excited by the space that we're in, and we think with some sort of forward-facing marketing and education to potential shareholders on why this is so exciting, I think we can get some traction. And the sandblasting, water jet cutting, filtration are the big uses of this material. And those are everyday products used by everyday people everywhere globally. And as infrastructure deteriorates globally, things need to be sandblasted. Shipbuildings and major use of almandine garnet specifically. The water filtration industry is becoming a big thing globally. So there's a lot of uses for the product, and I believe we can really get people excited about that. And obviously there's going to be a major push from ourselves to do that, and I think you'll see the same from IDG and other garnet producers, really to get people engaged, and there's no reason why they shouldn't be. But yeah, so in respect to obviously share price, etc., and the market aside, it's incumbent on us to get people excited about why this is such a good opportunity.
Now, I did forget about Mozambique at the beginning, but I'm not going to forget at the end. You've got 70% of the project in Mozambique. What I found fascinating was clearly great jurisdiction, because there's Rio Tinto in there with quite a large land holding. What excites you most about Mozambique?
Look, it's a mining friendly jurisdiction, and specifically mineral sands friendly jurisdiction. Chem has been operating there since early 2000s, and they're very proactive in respect to assisting getting projects up. It's elephant country in respect to the scale of projects. So our project as it stands, albeit that we have a fairly small resource, has the potential to deliver a very large resource. And we're in the right neighborhood. General infrastructure in country is good. There's power, there's hydropower, and general infrastructure is at a reasonable standard as compared to most places in Southern Africa. And additional to that, the tax regime in country is not it's not debilitating as it can be in other third world jurisdictions. And they're a great nation and a nice bunch of people, and very, very proactive workforce, and there's some skills in respect to that workforce, specifically with Kenmare's history in country. So lots of reasons to be excited.
Well, it's been a great presentation. I congratulate you on the scoping study results. The numbers speak for themselves, and we look forward to watching you as you get into production here in the at Port Gregory and the development in Mozambique. But for now, we've run out of time. Adam Schofield, Non-Executive Chairman of Heavy Minerals, thanks for joining us at the NWR Aussie Resources Conference.
Thank you, Kerry.